Good evening, everyone. Good evening, good morning, good afternoon, wherever you're listening to us from around the world. Thank you so much for joining us once again and watching us today. Today, the 13th of January 2025, you're welcome to another market update. Today, we are also going to be doing something very special because the market has been on the downward trend since the last couple of five trading days, and we want to actually bring things into perspective for you. But before we get the ball kicking, just a housekeeping. Every recommendation, every information shared on this channel is for education and information purpose only. So please consult your financial advisor or do your due diligence before making any decision. And on that note, we welcome you to Stocker Team, the Investors channel. We are going to be looking firstly into the market roundup for you to actually know what exactly is driving the market, and also talking about the special topic we have today. Why is the market crashing? But before we do that, please subscribe to this channel, put on your notification bell so that you don't miss any update, and let's jump right in. So today we got the news. Moderna actually released their earnings report. The company stock actually went down by about 18%. Yes, 18%. Moderna is actually cutting the full guidance, the expectation of their revenue by about $1 billion, because the company is actually getting less and less demands for its COVID vaccines, and that was what made this company to really ramp up during the COVID pandemic. But ever since COVID, it's no longer a big deal. It's no longer a pandemic. It's now, very, very tamed. Moderna has really crashed from all-time high of $400 per share to, almost 18 or less than that. So this stock has really, really taken a beating. And Moderna, for me, is not a buy. I don't even play in the pharmaceutical side of things. So that's it for me. On the second note, Bill Ackman, one of the most respected activist investor on Wall Street, is making an offer to take over Howard Hughes. Howard Hughes is a U.S. real estate developer. He wants to buy this company for about $85 per share. The stock of Howard Hughes moved about 11% as at the time we round off our update. So the U.S. Real estate industry is really has been very, very challenged, from inflation, all-time inflation, to what is happening now in Palisades in California. So a whole lot of people are paying more, double of what they used to pay in terms of interest. So Howard Hughes is also a company that hasn't really made money for a long while. The company has just been there. It's not really a fantastic company to invest in. So for me, it's not a buy for me. Bill Ackman, fantastic investor, fantastic activist investor, but for me, I'll pass on this. ARM, one of the stock that is on my portfolio, ARM has just announced that they will be hiking their prices by about a whopping 300%. Yes, you heard me. And they also want to use that to generate about $1 billion annually on top of their revenue. So what does ARM does? ARM doesn't necessarily produce the semiconductor. They have the intellectual property, the design of these chips that the likes of Microsoft, Apple, a whole lot of these companies that are making all the smart devices, all the smart technologies that you are using. ARM designs it, but they are actually looking to design their own chips and develop their own chips and produce their own chips. Watch out for ARM. It's a buy for me, and it's also on my portfolio, but it's a limited exposure. Apple has a negative news today. Yes, you heard me. So there is a Counterpoint Research. Counterpoint is one of the most respected research companies in the smartphone industry. They came up with this data that sales of Apple devices went down about 5% globally last year, in the final quarter of last year, and they also said the market share of Apple is now about 18%, and so Apple's overall market share has now declined by 2%, whereas globally, sales of smartphones actually went up by 4%. It's yet to be seen. Apple is going to be releasing its fourth quarter results. Apple is a buy for me any day, anytime, because of the fact that Apple rewards investors, Apple rewards its shareholders by doing buybacks year on year. Last year, I made mention of it last week, that Apple did about $150 billion buyback. This year, we are still waiting for the announcement of the buyback. So yes, you might say, oh, Apple has not done anything innovative, just like Mark Zuckerberg said today. But what has Meta done innovatively in the last 4 or 5 years? Meta has just been buying companies that are actually competing with it. So Apple is still the leader in innovation for me, and because they do buybacks, they will continue to outperform irrespective of what happens in China. Apple will find a way around China. On the final note on the update for today, before we go into our topic for today, Nvidia, actually, they are seeing some challenges with the Nvidia devices, the Blackwell chips that the entire market has been waiting for. Some of the first shipments are now said to be having some overheating issues, which to an extent, the likes of Amazon, Meta, Google, which they are the prime customers of Nvidia with these Blackwell chips. They are now actually, cutting back the order they are making. Is this going to hurt Nvidia in the medium term? Yes, but in the long term, Nvidia is still going to outperform. Nvidia is number one on our list for the AI companies that is going to outperform this year. Now, coming to why we are here today, the topic for today. Why is the market crashing? Should you start selling your stocks? Should you stop buying shares? Should you close down your account? Is this the end of the market? I wouldn't say yes now, because I want to actually build a case. This is not to actually convince you to remain in the market. This is to just tell you what I do, what we've been doing for the past 6-7 years, that I have been an investor. A whole lot of my team members, they've been investing in this market on Wall Street. But before I jump into the topic for today, please, if you have made it this far, click on the subscribe button, put on your notification bell so that you don't miss any update, because tomorrow we are coming with a banger. And now let's jump right in to today's the reason why the market is crashing. Number one, so where are we as we speak? Nasdaq and the S&P 500, they've now lost about 2% of their value. And Nasdaq and the S&P 500, they are the most prestigious, most tracked, most recognized indices in the market. So if you want to know how you are performing in the market, you have to actually benchmark the performance of your shares, of your stocks, of your portfolio against these two prominent prime indices. So year to date, they are actually down from January 1st to today. They are down by minus 2%, which is quite a lot. And people are asking questions. What should I do? Should I stop buying stocks now? Should I even stop investing? Is there problem coming on the way? What exactly is going on? I'm going to unpack that for you as we go into this video. So follow me. Now, number one reason why the market must have been pulling back, why the tech stocks have been getting serious beating. There's fears of inflation. If you look at the chart in front of you, you can see that inflation in the US has started creeping up. We had all-time low for almost 2 years in September last year, but after September, October, November, and December is likely to come a bit higher. So this is having that sentiment in the market that borrowing costs will increase. A lot of tech stocks that have run so high, the likes of Palantir did well over 400% last year. Palantir has now pulled back by more than 15%. So a whole lot of tech stocks that have done very well last year, they will surely pull back because the market has an expectation that borrowing costs will continue to increase in the short to medium term. So the market actually is front loading. What do I mean by that? The market is actually taking precaution by rotating some of these stocks, selling some of these positions to rebalance their shares, not necessarily a crash. That's number one. Number two, if you look at the US bond rates, which is the US prime savings account. So for instance, if you actually do a fixed deposit in the US using the US dollar, what would you get for a 10-year term or a 2-year term? If you look at the 10-year term, it's about 5.2%. And if you look at that trend, it's been going up since the beginning of this year. That is not a good news for tech stocks. A lot of stocks that are way overvalued, they've ran so high so fast. Nvidia did almost 200% last year. Tesla did almost 70% last year. So the 10-year rate keeps climbing. The sentiment actually leans towards a higher rate in the medium and perhaps the long term. So a whole lot of people are buying this fixed rate or this rated bonds because they actually feel they want to actually earn some interest because they don't know how the market will perform. But is this the end of the road for the financial market, for the stock market? I don't think so. So follow me. The Federal Reserve, now, if you look at the probability of the Federal Reserve cutting rates, the probability according to the poll has now dropped to about 2.2%. 97% of the people polled in the market actually said there is either going to be a hold in the rate or an increase in the rate. So this is also adding to the fears in the market, and it's making a lot of people to actually reconsider their exposure to the high risk or perhaps high capitalization part of the market, which is majorly the tech stocks and a whole lot of companies that did very well last year. Now, we are now getting to the real answer and what I think. And I'm going to share, and I've built a case why the market is behaving the way it is. And I'm going to actually build a case why I think this is actually just the beginning of a bull run that is coming. Look at the S&P 500, the all-time high charts. If you look at the beginning when this index, the last time this index was tracked, you can see it has done 676%, and you could see some drops in between when we had the 2000 dot-com bubble, when we had the 2007-2008 recession, when we had the COVID pandemic. You can see the sharp drop around 2020, and we had the Russia-Ukraine war, but the chart keeps going up. That is the way the market goes. Irrespective of the drops in between, 1 or 2 years in between, the market keeps going up, keeps beating its all-time high. Look at the Nasdaq. The Nasdaq has just almost performed almost exactly like what the S&P has done. If you look at the dot-com bubble, you saw the rise before the dot-com bubble in 2000. If you see the 2007-2008 financial crisis, there was also a massive drop. The COVID pandemic in 2020, before the lockdown, you can see the massive drop. The Russia-Ukraine war, the same thing. Out of all of this downturn, the market comes back real hard, goes up, claims all the losses, and billionaires are being made. Investors get rewarded for sticking to the market. That is the trend in the market. So there's nothing for you to fear. There's nothing for you to actually be afraid of. This is actually the best time to become an investor. So just to summarize my position for today, and we close on that note, and I really thank you for following my argument. Let me know if you actually agree with me. But on that note, the data actually matters, the big picture matters, but it's just for your guidance. So whatever noise you are hearing, the noise, the wildfire in California, the inflation rate, the bond yield, the interest rate in the US not likely to be reduced in the next 3 months or so, or even in the next update that the Federal Reserve will be talking. All of these things matters, but it is just for your guide. And another thing, the market work in cycles. Like I've shown you, looking at some of these charts, the market has a cycle when things rotate in and out, but everything still keeps going up at the end of the day, because that is the way Wall Street is. It is not a place for you to run away. It is a place for you to double down on your conviction. You are an investor, not a gambler. This is very, very important, and that's why we created Soccer Team, the investor channel, to actually differentiate between gambling and investing. So if you're an investor, you are investing because you have seen value in asset classes, from stocks to ETFs to mutual funds. That's what you do as an investor. As an investor, the bigger picture matters, and it is the best time to be an investor because you can actually dollar cost average. Because you bought something at $50 today, tomorrow it drops to 45, you bought again. Another day it drops to 43, and when it gets that floor and the market is about to run, you tend to actually make more money, and your portfolio becomes much more valuable than if you have just bought once and you left the market. So continue investing in the names that you believe in. Some of the names that we've shared, you can consider them, but it's left for you. Do your due diligence. The market will always clear all the losses and perform its all-time highs. That is guaranteed. That is what the Wall Street is all about. It is a place where the richest, the most brave of the bravest investors, that is where they invest their time and their money and their energy. So put your money where your mouth is, and take opportunity of this golden opportunity. Take charge of this opportunity and go into investing. Do your research, do your due diligence. On that note, thank you so much for being with us. So the market is crashing, but it is not the end of the world. It is actually the best time to buy. What have I been doing? I've been buying more Palantir. I sold some stakes, especially half of my stakes in Joby, and I bought more in Palantir. If the market continues to have a downward trend tomorrow, I'll buy more, because I still have more than 80% of gains in Joby that I'm going to roll in. So I have more conviction in Palantir because that is the biggest part of my portfolio. Apple, yes, I'm going to still buy Apple. I just want to see where is the floor for this negative sentiment. Once we get to that floor, the market will rally. So on that note, thank you so much for joining us. Please continue to like, share, subscribe to this channel, and put on your notification bell. You've just watched Soccer Team, the investors channel. Till tomorrow when we meet, keep investing, keep growing.